Most investors think success comes from playing offense, picking the right investments at the right time. But in my experience, that's not what determines long-term success. I started off my year-end 2025 commentary by saying that 2025 was a strong year for markets. And 2026 started off as a bit of a mirror image of that strength. But recently, that's all changed. We are only one quarter into 2026, but the headline of the year now might be that 2026 has been a weaker year for markets. Of course, I'd prefer if markets were never weak, but periods of weakness often create opportunities for long-term investors. I don't know if the current market weakness will continue, but recently, my process has been signaling a more defensive posture. And speaking of defense, I tend to think about it a little differently than most investors. For many, defense might mean holding bonds, raising cash, or simply committing to never sell, as in buy and hold. But the thing about defense is that it often feels completely unnecessary right before it becomes essential. The goal for every investor should be to find an investment process that works for them, and then stick with that process. It's my strong belief that having the ability to play defense is what allows investors to stick with a sound process over time. And that belief comes from two places. First, my experience of nearly 25 years working with clients. And second, the math behind losses, which gives me a deep appreciation for playing defense. A 10% loss requires an 11% gain to recover from. A 15% loss requires 18%. A 20% loss requires 25%. And a 50% loss requires a 100% gain. That escalates quickly. Losses beyond 20% can become very difficult to recover from, and more importantly, much harder to stay disciplined through. I also believe that as assets grow, avoiding large losses becomes even more important. Larger portfolios are often associated with investors approaching retirement or already in retirement. A one-size-fits-all approach to risk doesn't make much sense at that stage. A 50% loss when you have $10,000 invested is painful, but a 50% loss when you have $1 million invested would be catastrophic. My process uses defense a bit more actively than simply holding bonds, cash, or committing to never sell. It involves reducing exposure to investments that are trending lower with the goal of managing risk at the portfolio level. It's important to note that I'm not trying to predict markets or maximize short-term returns. I'm trying to build portfolios that can withstand a variety of market environments and help clients stay disciplined over time. The process I use isn't entirely unique in the industry, but it's less common in the RIA space. Since I charge an assets under management fee for my clients, I believe there's a responsibility to actively manage risk, not just participate in markets. And lately, I've found myself coming back to the word stewardship, which I define as managing entrusted wealth with discipline and a long-term focus. I believe that having the ability to play defense is a key part of being a good steward of my clients' assets. I also mentioned in my last commentary that it might not be as easy in 2026 to make money as it was in 2025. While we are still early in the year, that may be proving true. As much as I don't want defense to be the word of the year, I do think it's wise to be prepared, because in investing, long-term success isn't just about how you grow your wealth, it's about how well you protect it along the way. The firm continues to grow, largely through introductions from clients like you. I'm so grateful for the trust you place in me, and I take that responsibility seriously. Thank you.